you want to make your estimated taxes. You don't want to wait till the last minute, especially with the stock market being wacky right now. I mean, there's a lot of people that they say, hey, I'll just sell some stock at the end of the year and then I'll just pay off my tax. If stock market goes down, you might not be able to do that. The point is, pay your estimated taxes over the year, make your quarterly payments, get a tax advisor to help you so that you know exactly what you need to be paying, or at least you have a sense of what you need to be paying so you don't end up with a tax bill at the end of the year.
Welcome to another episode of Financially Legal, the podcast for law firm CFOs and anyone else at a law firm who is filling that role. I'm your host, Emery Wager, co-founder of Confido Legal. We are an embedded payments platform specifically designed for the legal sector. And today is April 17th, a few days after the tax deadline, which is actually a perfect time for this episode. Today, we're going to be talking to Stephen Weisberg. He's an attorney who specializes in helping both businesses and individuals resolve tax debt after the deadline has passed. Stephen is a IRS tax expert. He's helped hundreds of individuals deal with the IRS, negotiate situations, and resolve tax issues generally. He founded the W Tax Group after a career in litigation. So went from litigation to tax lawyer, and now is the founder of the W Tax Group. He's, like I said, a tax resolution specialist, and he also has a degree, interestingly enough, in psychology. So I'm excited to see, Stephen, how that plays into your work today.
Sure. Thanks for having me.
Absolutely. Let's dive straight into it. Let's kind of move upstream. We'll start upstream a little bit. Law firms, have unique business structures. So talk a little bit about how do taxes flow from the firm down to the individuals at the firm typically. And I know there's unique setups, but what are kind of the typical flows there?
Again, it depends how the firm's set up, but most firms are set up so that it's a flow through entity. So, the profits of the firm flow through to the individuals, the partners of the firm. So, the tax debt would be for the individuals or the partnerships or partners of the firm.
Yeah. So you've got certain employees maybe who are W-2, not partners. They're just getting a regular W-2, and then for the partners, those taxes are flowing straight to them. And when do those typically hit for a law firm? Is that kind of end of the year distributions, or like what's kind of the standard practice there?
Yep, that's end of the year. You determine what the firm has made over the year, and then the partners then receive their distribution based on however it's carved up, and they'll know what they're going to be taxed on for the year.
Is it typically left up to the partners to cover those taxes, or does the firm reimburse them in any way for those? I've worked in businesses that go both ways, but I'm curious if you see any sort of trends in the legal space.
My general inclination is that the partners pay their own taxes. I haven't seen that otherwise, but generally because it's a individual tax on an individual basis, like they would be responsible for those taxes.
Understood. So let's then transition. Okay, that's how the taxes flow from the firm to the individual. How do people get in trouble?
That's definitely where I come in, because people get in trouble all the time, unfortunately. But so, we'll start at like the W-2 level. A lot of people who are in the W-2 level who are getting a paycheck, they're probably not going to have a tax issue. But the ways that they do have a tax issue, a tax debt, is if they're not having enough taken out of their paycheck, enough taxes taken out of their paycheck. And that's up to them when they fill out their deductions and exemptions about how much is going to come out. And some people purposely don't want enough taken out, and then they say, oh, well, I'll get it done at the end of the year. Generally, that's not a smart way to go about it, because then most people don't get it done at the end of the year. So you want to have enough taxes taken out of your paycheck so that you're not going to owe anything at the end of the year. And then also individuals, at the W-2 level, really the other way is if they take money out of a retirement account or they sell a property, those are the type of things where they get into tax debt. Generally, though, the people that get in the most tax debt are those who are self-employed or like we're talking about, who might be getting a K-1 or a partner in a firm. They're required to make payments to the IRS, but it's not an automatic deduction like it is with a paycheck. So, you have a lot of people who are supposed to be making estimated payments on a quarterly basis who don't do it and kind of have the same rationale as what I was talking about with the improper deductions from the W-2, where they say, oh, I'm not going to make estimated payments every quarter. I'll just, make up for it at the end of the year. And then invariably, some people are able to do it, and maybe they've planned out well enough so that they can do it that way. But some people aren't, and they aren't able to do it. They come to April 15th and say, oh, shoot, I can't do this. I don't have enough money. And that's where the tax trouble starts. And that's where a lot of my clients come in who are on an individual basis that have tax issues.
That's interesting. The way the law firm works, they're getting that big distribution at the end of the year, but are they still required to make quarterly payments up to that, like quarterly estimated payments based on their previous year or some other metric?
Well, so that's, where your tax advisor would come in to help you determine, what kind of payments you need to make throughout the year.
How do people know that they have a problem? Is it a letter from the IRS? Is there something more subtle? Like how do they know that they should call someone like you how does it all start?
Yeah. Well, I mean, first and foremost, they know that they didn't pay their taxes or they, they didn't file their return. But assuming they're gonna, not just take that for what it is, they'll start getting letters from the IRS, and the IRS is required to send certain letters before they can take any sort of enforced collection act. Let's say you didn't pay for 2024. They can't just enforce collections against you and take money from your bank account or garnish wages or whatever it may be. They're required to send out certain notices. So you will start getting notices. They used to be more systematic, I guess the answer would be, where it'd come out kind of one notice would come out and then maybe a month later another notice would come out and then a month later another notice. They haven't really been that way, especially since COVID. But like I said, there are certain notices that need to go out. There's three important ones that go out. One where, you're told, how much you owe. And then the next one is CP 504 or 503, which says like, look, we're going to levy your account. We're going to, garnish your wages if you don't respond to this. Now, the reality is when they get that notice, the IRS can't do anything after that notice. They still have to send another notice after that, which these days is being called the LT11 or the CP90. And once you get that notice, that is, for technical and practical purposes, is your final notice of intent to levy. You have 30 days from there to either, negotiate with the IRS and come up with a resolution. You can also file an appeal in those 30 days. But once those 30 days are up, the IRS then does have the ability to garnish wages, levy bank accounts, and potentially seize assets. I would suggest taking action before that. I would suggest taking action right when you didn't pay. But I just know from experience, and I don't totally blame people for this, but they're nervous, they're scared, they have anxiety, and there's just human nature of kind of sticking your head in the sand and saying like, I'll figure this out some other time. Mm-hmm. But if you can, you want to get in touch with a tax attorney right when you know that you're owing the balance. The IRS is the most powerful collection agency in the world. It's basically what they are. They have a lot more power than any other creditor that you might have. So you want to have as much leverage as possible, and the most leverage you have as possible is at the beginning, before it gets down to those final notices.
And what are kind of those vectors? Like what whether you're doing it yourself or working with someone like you, what opportunities do you have to manage that process at that point?
Yeah, I mean, You want to address the issue. There are resolutions that are available to you, um, and it all depends on the situation. It all depends on the circumstances, but you want to work out a resolution with the IRS based upon the balance you owe, based upon how much time is left on the statute of limitations. The IRS has 10 years to collect from you, and if they don't collect from you, they don't get the money. Depends on your finances, and it depends on equity and assets, including, and then also income and expenses. So there's a lot that goes into it. Now, that said, if we're talking about specifics, there are specific resolutions that you can use to your advantage when dealing with the IRS. And again, it depends on circumstances, but um, there are installment agreements that you can get into with the IRS, which is a monthly payment plan, but it's not as easy as just getting into a monthly payment plan. I mean, there's potentially times when it might make sense for you to just get in a regular payment plan, but it's probably not going to be most favorable to you, depending, or at least depending on your financials. There's what's called partial pay installment agreements, which is where you would pay the IRS something per month, but you never pay off the total amount of the balance that you owe. There is currently non-collectible status, where the IRS, you can show the IRS that you can't pay the IRS anything right now, and they'll stop any enforcement action, and you won't have to pay them anything. Now, that doesn't always last until throughout the statute of limitations there, the 10 years, but it's something that taxpayers have available to them. And then there's the vaunted offer and compromise, that which people have heard of, where you pay a portion of the balance of what you owe and it gets rid of the total debt. Now, just real quickly, most people don't qualify for the offer and compromise, but it's certainly something to look into.
Give us kind of your best ninja story that you're proud of with a client that you really, kind of transformed the situation.
Well, I mean, I have so many of those, and I'm not tooting my own horn. I mean, I have a lot of them. I will tell stories about offering compromise, but I kind of hate to do it because, again, not everyone qualifies it for it. I've able to resolve, a $500,000 balance for $500. And I have multiple stories like that, of that large of a balance being resolved for that little. But again, most people don't qualify for that because they're making too much money. But it does happen, and it is a possibility, even if it's not a $500,000 to $500 story. There are times where you can resolve the total balance for only a portion of what you owe. It all depends on finances, depends on the statute of limitations, depends on equity and assets, income, expenses, all of it together, that determines whether or not you're eligible.
Got it. Interesting. Let's shift gears a little bit and talk kind of current state. We've got a new administration. We hope this content will be evergreen. So if you're listening to this 5 years in the future, this is the new 2025 Trump administration that's coming in, certainly shaking things up. Yeah. What changes have you seen, and what changes, put kind of the prediction hat on? Like, what do you see coming down the pike?
I am in favor of what Doge is doing in terms of increasing efficiency, in terms of getting rid of waste and getting rid of fraud. And I know that is happening in the IRS, just because I know it's happening in all aspects of government. That's just a part of government. It doesn't mean one administration did something and another didn't do. Like, it's just part of government, through and through, and it is what it is. So I like the idea of what Doge is doing, and I think long term it's going to be good. The problem that we have right now is that, as we've seen, that Doge is cutting. It looks like the IRS has come up with a plan to cut 40% of their employees. That's a large amount, and like I said, I think down the line, what Doge is doing is going to be helpful, and I think things will be running more smoothly. I think it's going to be easier for taxpayers to help themselves with controversies in tax debt. The problem is, over the next year or two, while those efficiencies are being increased and created, and the waste and is being ferreted out. They're getting rid of employees that know how to use the systems, that have the intellectual know-how of how to resolve these cases, and the efficiencies are not going to be in place tomorrow. Doge can say what they want. Oh, in 30 days, right now they're talking about a hackathon. So then in 30 days, they'll have access to all kinds of information. They'll be able to share information between systems and data and this and that. It's not going to happen in 30 days. All these changes are not going to happen in 30 days. They're cutting people too quickly. They're taking a chainsaw to a situation that probably needs to be manicured.
Yeah.
And so in the short term, at least for at least a year, probably longer than a year, I mean, it's going to be very difficult for taxpayers to be able to resolve any compliance issues they have in terms of not being able to file or where they haven't filed returns, or any tax debt issues. For me personally, I think it's going to be good for business because, like I said, people are going to have a hard time getting anything done with the IRS. But you know, while that's all fine and dandy for me, my heart at the end of the day is with the American taxpayer. And for them to have so many problems trying to get even the most simple things done, which I think they're going to have over the next couple of years, is not what I want, and I don't want to see that. So my preference would be that Doge keeps around many more employees that they're saying they're going to cut. Now I don't know if that's going to happen. My preference would be for them to keep them around, and make sure that systems and softwares are working properly, and we've got rid of the waste. You just can't get rid of everybody and in one foul swoop, when this needs to happen over an elongated period, so that systems can work properly, so that taxpayers can get done what they need to get done.
Interesting. You talked about kind of like the vectors or resolution paths. Do you see any kind of new ones opening up, or any existing ones closing, or anything like that?
I haven't seen anything new happening, and I haven't seen anything close. The general resolutions and negotiations are out there. I don't think those are changing, but I have seen a willingness from the IRS, of trying to make resolutions easier as opposed to harder. There have been a lot of resolutions and negotiations over the years where, you know, very intense financials were needed and that were reviewed very intensely, and there was, complex negotiations. And that's still needed on a lot of things, but I've seen a willingness of them to change some of their policies and to allow certain payment plans, installment agreements to happen without that intense review of financials.
Interesting. What what advice that we haven't covered, do you have for the law firm partner who, could be getting into this situation in the future? What kind of parting advice would you have for them?
Yeah, I mean, I would just reiterate, some of the stuff that I said here. I mean, you want to make your estimated taxes. You don't want to wait till the last minute, especially with the stock market being wacky right now. I mean, there's a lot of people that they say, "Hey, I'll just sell some stock at the end of the year, and then I'll just pay off my tax." If stock market goes down, you might not be able to do that. The point is, pay your estimated taxes over the year, make your quarterly payments, get a tax advisor to help you so that you know exactly what you need to be paying, or at least you have a sense of what you need to be paying, so you don't end up with a tax bill at the end of the year. And then if you do end up with a tax bill at the end of the year that you're not able to pay, make sure you resolve it right away. I would never advise anyone, even lawyers, to be calling the IRS on their own. The IRS has all the leverage in the world. I would say you shouldn't represent yourself with regard to the IRS. They're out to get as much money as quickly as possible. And that's what they're there for. They're not there to help you. So but you do want to get it resolved as quickly as possible. Get a tax attorney, someone with specific expertise related to tax debt involved, and get that thing resolved as soon as possible when you have as much leverage as possible. Don't pretend it's not happening.
In your current role, are you actually acting as an attorney?
Yes. Yep. I'm involved in all day-to-day activities. I'm representing clients on a daily basis. A lot of revenue officer work. That's, when there's larger balances, more complex cases. A lot of work with businesses that have payroll taxes. And, depending on where you are and what your position is or ownership is in the law firm, a law firm could come across a payroll tax issue, and I've seen it myself, or where when you have employees, you take money out of their paychecks to pay the IRS, right, on behalf of your employees. That's why the automatic deduction happens. Is the law firm or the business is taking money out of the paychecks of their employees, and they're giving it to the IRS. Well, if you need to pay other vendors for whatever reason, and cash flow is down, there are business owners who take the money that they've taken from their employees' checks and they use it for other reasons because cash flow is down and they need to pay vendors. Then they say, oh, cash flow will increase, and then it doesn't increase. And at the end of the year, they have payroll tax issues where they didn't make the deposits with the IRS like they were supposed to. So that's a huge problem. And I do a lot of that work. There's also a personal aspect to that where, as the owner of the firm or the business, where you get hit with what's called the trust fund recovery penalty, and so even though it's a business payroll tax debt, you're going to hit with a personal tax debt as well. So the IRS certainly looks down upon that. So you got to be careful with those types of things when you're a business owner, and that's one of my specialties there. But I'm also working with everyday taxpayers. At my company here, we work with everyday taxpayers, whether you're W-2 and you took money out of a retirement account, or certainly if you're self-employed, we do all of that work, and I'm involved in it daily.
Awesome. Well, Stephen, this has been super helpful. It's April 17th, so I was thinking this episode is going to come out a little bit late, but having talked to you, I think maybe it's coming out right on time.
Yeah, exactly.
for those who...
Tax debt is not just during tax season. It happens actually right after is when most of the tax debt happens. So just like you were saying, it's probably right on time.
Perfect. So this will come out, late April, early May. And for anybody who is listening that needs help, where do they find you?
Personal website is weisberg.tax. That's WEISBERG.tax. My company website, as you said, I founded the W Tax Group. It's at wtaxattorney.com. I also am very active on LinkedIn. So if you find me on LinkedIn, you can find out more about me and find more of the stuff that I'm talking about and get my insight into different topics. And then, you can always reach out to me. My telephone number, my personal telephone number, if you want to, I like to have conversations with people, to be honest. My personal telephone number, for my business is 248-971-0885. And that's a direct to me. And the last thing I'll say is I have a lot of really good relationships with other attorneys, depending on what field you're in, but a lot of bankruptcy attorneys, a lot of family law attorneys, but really all attorneys who come across clients that have tax debt issues. They don't want to handle those tax debt issues or don't know how to handle those tax debt issues. And, bringing me in to help resolve those tax debt issues, make your life easier and help, you move forward with the services that you're providing, so it doesn't get all stopped up with the tax debt.
Oh, makes sense. Well, thanks so much, Stephen, for joining us today. For those listening, we drop episodes of Financially Legal every couple weeks. You can get the most up-to-date info on Financially Legal by following Confido Legal on LinkedIn. We'll let you know when new episodes are coming out. And if you prefer email, you can go to confidolegal.com/financiallylegal and sign up. So we'll see you next time.
Thank you.